I love that intro. What's up, everybody? Welcome to another episode of CRL Chart Request Live. I'm Spencer Israel. He's Steve Strazza. And Steve, today's a very special month here at Stock Market TV because it is the first day of the month, which means we are excited to talk about some monthly candles. And I believe you have a few. So we'll do that before we get to the charts or the tickers in the chat. Let's go.
See my screen?
I do.
Just had to add this last one. What a goodie this one is. So let's start it here, right? Real quick. Let's do a couple minutes on what we saw from the monthly candles that we were reviewing last night. Things are good at the index level, especially at the growth index level. You see that here with the NASDAQ. We've been drawing arcs around these charts. And as you can see, the S&P 500 just about completing its own base here, right? You know, all eyes are on this current level, confluence of resistance here for the S&P. But the way we would look at something like this is, hey, if its peers are going to go, it's likely to follow, right? So does the S&P follow the NASDAQ? That's the big question. When we move down the market cap scale, things get a little dicey, right? They don't get necessarily bearish, but we have to exercise caution when we look at something like the Russell 2000. So this is IWM, you know, resting right up against these prior cycle highs from 2018. So that's really the level for the Russell. It's been the level, 170. We have a handful of tests just since, you know, the second half of last year. Continue to come down to this 170 level, test those pivot lows, which coincide with the 2018 highs, and then bulls step in. They got to keep stepping in, though, right? If we get some corrective action in the coming days and weeks from the strongest stocks, we're looking to indexes like the Russell, financials, and the value line for these prior cycle highs to hold, right? So financials, we got the 2018 highs, 2020 pre-COVID highs, and the pre-financial crisis highs right here at 31. That has to hold for XLF, right? We start having very different conversations in an environment where this level is being violated. And then this is the value line. This is what the average stock is doing. 595, 600-ish is a huge level there. That's those 2018 highs. You really want to see that level get, be reclaimed and soon. So that's all I got,
Wait, hold on. Explain this value line thing a little bit deeper. So what?
Yeah. It's the best representation of the average stock.
Okay.
It's about 98% of the investable U.S. stock market. Also includes some Canada, believe it or not. So it's really developed in North America. And it's equal weighted or not technically equal weighted. It uses a geometric average. But what that ultimately does is it illustrates the average or the median stocks performance, right? So if you want to know what most stocks are doing, we look at things like the value line.
Interesting. So it's been in a bit of a downtrend.
Yeah.
Even though
it's
market's been up. But we know why that is.
It's going to look a lot like small caps at the end of the day. And if I were to zoom out on the value line, you know what? Let's just do it. Let's just do it, Spencer. Oops, sorry. Give me 1 second here. Let me mark this up.
All right. Well, while he's doing that, I will say what I always say, which is if you have a question on a stock or an ETF, anything with a ticker or a chart that we can pull up, drop it in the chat. That's what this show is for. If you want, you can email us questions@stockmarketmedia.com. But it's probably just easier if you hop on into the YouTube stream. If you're watching us on Twitter, that's cool too. But I can't watch 4 chats at once. So if you're watching on Twitter, hop on over to YouTube, search Stock Market TV. You'll find the show. Hop into the chat, drop your question, drop your ticker. We'll do our best to answer. We have a few already. So
check this one out, right? Value line doesn't look great. Retesting that 600 level from below, right, and rolling back over. But then we have another monster level here, just north of 500. This is the 1998 high. Notice how it peaked long before the NASDAQ during the dot-com. The 2007 high. And then 2014 through 2015 high right here. So what a, massive shelf of price memory here at 500. this would be similar to, JC and I continue to say XLF at the pre-financial crisis highs is the most important chart and level in the market right now. This is in the same conversation, right? Those things probably happen together.
All right, let's go to the chat here. Let's start with an easy one. Let's go with Tesla first, and then I want to look at this other one from Benjamin.
Things are shaping up for Tesla. Yeah. Get rid of volume here. Look, here's how we were drawing this past, year to 2 years, right? You have the top here.
Oh, Gene, if it wasn't clear, we switched over to Trading View. Let's try bringing us back on the. I think when you shared the Steve's screen there. Hey, we're back. Okay. Apologies, everybody. I had a bit of an audio glitch there, but we are back because I can hear myself, which means you can hear me. So the good news is you were able to see what Strazza was doing. The bad news is you couldn't hear what he was doing. So maybe let's start that all again, Strazza.
All right, I'm tweeting it out. Everybody's going to bring their chart requests now. You want me to do Tesla again?
Yes, please.
Yeah. So when you zoom out here, right, classic top. I've drawn a diagonal support line here. You could call it some sort of like complex head and shoulders, whatever. It's a distribution pattern. It did complete to the downside, and we got a big leg lower ending last year, right? If you guys remember, Tesla went from 400 to 100 last year. Lost 3/4 of its value. Now you got a nice base shaping up here. In fact, let's show it, right? Arcs are really ugly on TradingView. I've probably mentioned that 100 times already. I'll continue to. So they're not geometric arcs at all. So again, we've already retraced now about 38% of this move. I've drawn this little bar here, this little resistance rectangle right around 210 to 220-ish zone, right? Because you have the pivot lows from last May and June, and then you have the pivot highs on a year-to-date basis, all lining up at the same level. A decisive move, right, out of this zone, above this 38% Fibonacci retracement. So maybe call it 220 for confirmation. I think it really gets it done at about 215 if you want to jump it. But then that tells you that the primary trend is now higher, right? If I were to drop a 200-day moving average on here, you would see it curling up, and we would target like 293 here. Let me add the two.
All right. This is one from Benjamin I'm not familiar with. Enovix, ENVX. This is a lithium play? I'm not quite sure. Yeah, it's a lithium ion battery maker. I don't know, really. ENVX. We getting there? Okay.
Wow, what have I done here?
I don't know. I'm watching. I have no idea what's going on.
Incredible. All right, I just wanted the 200-day moving average. Crying out loud. Wow, what a mess. This thing is a total mess.
Oh, the question was, does it look good into the gap fill to about 18? That's what he was asking.
No, look, there's just for me, especially in an environment like we are today, where more and more bullish chart setups come across our desk every day. One of the biggest, prerequisites for me to get interested or involved in a name is it's got to be clean, right? I want to know exactly where I'm at, like where I'm out, where I'm wrong, where am I going to define my risk on this trade with a chart like this, right? Because we're overshooting August of last year, then we're coming crashing back down. This thing went from the high 20s to $7, just in a matter of 1 or 2 quarters late last year. Now we're ripping back higher. I can't even draw a level on this chart. So no, this is not one I would participate in at all. I mean, look, if you have to get into it, I could zoom in and do this. That's really not even a touch there, but maybe the April highs, right? So just pivot highs and pivot lows are so good, right? They're great tools. So if you really want to get into this one, you have to get into it. Play it above the pivot highs from March, call it $15. And yeah, you can run it back to 25, but that's a big move.
Oh man, tickers are flying now. Okay, just fair warning, we will not be covering all of these today. We do not have the time. We'll go as quick as we can, though. I'll go in chronological order. We'll start with Sony for Joe.
Yeah, I like Sony a lot. In fact, I think I was saying, and
You
they
said
changed
that.
the ticker
Yeah,
on me.
yeah.
It used
It's
to be
not.
SNY. They just went
No. It used to be SNE.
SNE. I'm sorry.
Now it's actually Sony.
SNY has always been Sanofi. You're right. So look, this is the move. We are throwing around charts of the Nikkei left and right these days because it looks so good. Alfonso just dropped the chart in the analyst team chat. New 33-year highs for Japan. So naturally, we are getting asked the question a lot these days. What's the best way to invest in Japan? Great question. This is the one, right? Because think about it. What is Sony? Sony represents everything that we want in the current market. Mega cap, technology, overseas, relative strength. It's got the base, exactly the bases that we talk about. You got the 200-day moving average, flattening out, curling higher, taking out the May or June highs from last year, taking out the year-to-date highs from this year. You could buy this one right here today, 95, 90, 96 and 3/4 it's trading at right now. I would measure this back up to the highs from late 2021, which come in right around 128, 130. This is the trade for Japan. I'm a big fan.
And they say buy and hold doesn't work. Just look at Japan, people. It worked eventually. Just took 40 years, 30 years. What about?
You know what, Spencer? I'll probably tweet this chart out later, but
yeah,
this looks almost identical to the Nikkei.
Yeah, I bet.
Want to do it?
Sure.
Right. So like when people ask like what's the best vehicle to invest in this, a lot of times you want to say, all right, what's going to track that they're asking
EWJ or Sony, yeah.
Right. And I would argue, Sony's going to track this as good as anything. So let's just overlay the two right here, right now. Throw up a chart of Sony. Go. Zoom way out so you guys can see what I'm talking about. Now I'm going to throw in the Nikkei. That's the NASDAQ. Just bear with me. Nikkei futures are NKY. Yeah. And let's go way back. Go all the way back, right? Just like you got this monster base.
Man.
Right here in blue, right?
Oh my goodness.
Started a little bit later, right? Of course, because it's Sony. So Sony's base started the .com bubble, but it's shaping up the same way as the Nikkei. And if you zoom in to the early 2000s on the Nikkei, right, I can draw like a clean resistance line right there, and it's already gone. right? So when you look at something like Sony, let's remove the Nikkei now. You say, okay, if the Nikkei already took out its equivalent levels from the early 2000s, then that's where Sony's going, right? So that would say this measures out to like 150. So that's tremendous upside, more than 50% from here.
All right, what about Truist, TFC? Joseph likes that fat dividend.
No, come on, Joseph. I need that dividend shorty, Spencer.
It's coming. It's coming.
So fat dividend. Let's see how fat.
I don't know. I made that up. I don't know how fat. I can
All
look
right,
if you want.
let's talk about this again. If I haven't been obnoxious enough about this over the past few days, these guys are paying a. Did I see that right? 7% yield. Yeah. Oh.
Uh, yeah, 6.8%. Yes.
If you think a regional bank is going to pay you a 6.8% yield, you've lost your goddamn mind. This is simply the market telling you that that dividend is not safe, right? That's all that is a function of. The average yield on the S&P 500, the average dividend yield is about 1.7%. So if you're getting like 2, 2.5, 3, that's great. That's really good. If you're getting 4, 5, 6, that's suspect, right? That's the market telling you that that dividend is not safe. I would rather buy McDonald's and get a 2.3% yield. All the stock does is go higher. It's a great company. We don't have to worry about a bank run happening at McDonald's. That's the way to go. Don't be greedy when it comes to dividends. 7% yield is something you should run from, not run to.
Here's one that's new for me as well. Opera, OPRA. Thank you, Troy, for telling me what this does. It's a Norwegian internet browser, $1.5 billion company.
What?
Yeah, it's an ADR. OPR.
I've never seen this stock.
Me neither. Never heard of it.
Whoever just said this, this is in our world too. How did we miss this one?
Probably because it was not in your universe until a week ago. Because look at the chart.
So this is over $1 billion. So we'll mess around with it. I mean, look at the base on this thing. Again, I don't know if I've mentioned how bad these arcs are, but look at that base. You got prior cycle highs from 2018, right after the stock IPO'd, again in 2019, again in early 2021, when risk peaked around the world. That level is 1450. This is now like a buy on any and all weakness setup. I love this chart. What a nice base. Let's measure it out and give ourselves a price target here. What will I do in a situation like this where I have 1, 2, 3 touches, right, of the same kind of resistance level here? Let's actually talk about this. This is good. I'm going to flip to a weekly and see where they line up on a weekly. Oops. And then I want to just know where the closing prices are. Okay, so that's where the closing prices are. I'm going to shift this down a little bit, and I'm going to draw my fib based on the weekly closes, because I can trust those prices more than anything else.
Because the close is the most important.
That's right. And when I do that, right, and now I'm going to flip back. I'm going to leave my fib on there, because if you ever see our charts, sometimes you'll say, we get emails all the time, how come you didn't draw the fib from where the daily price action is, or if we switch it to candles, right? How come you drew the fib down here instead of way up here? Well, because we just illustrated why, right? When I look on a weekly closing basis, the market's telling me that's the level. 1 touch, 2 touch, 3 touches, right? In fact, I could even lower it a little bit. And it's not a perfect science, and it doesn't have to be. Now it touches all of them, this fib. Now here's the problem. This is not investable, right? Because we've already made it the majority of the way to our price target. So flipping back to the daily, yeah, you can see that this thing's really been on a tear. This is now a buy on weakness setup. I would buy it back into this range from 1450-ish all the way down to like 1350-ish, right? That's where you want to get in. First target 19 and change, and then second target about 2850. This one looks great. Let's just illustrate exactly what I mean by that. Look at the relative trend. Wow. So slow starter following its IPO. And with the relative trend, you never want to, intraday stuff doesn't matter. So always just flip it to a line chart. Focus on the close. You got a base that's shaping up here and about to break out to new all-time highs in the relative trend too. There's a lot to like about this stock. Norwegian what? What do they do?
Norwegian internet browser.
Really cool. All right. I know what I'm doing tonight.
Can't make this stuff up. Thanks, Troy. That's a new one. We appreciate that. We're
No,
not laughing at
no affiliation to Oprah herself, though. That would be Weight Watchers.
no. No, it's not Oprah. It's opera. It's opera. But thank you, Troy. This is new, and we're into it. Okay. What is it? HLIT Harmonic. This is a communication infrastructure play.
Yeah. All right, let's flip back here. It's a $2 billion stock now?
Yep.
Been a while since I looked at this one, then. All right. Sorry. Slow internet over here. Harmonic, HLIT. Again, we got the 200-day on here. Look, this is a nice base. This is one that continues to come up on our scans. Stock's been around forever. This is telecom, right?
Yep.
I mean, look, it's trending a lot better than most telecoms. I'd rather buy this than AT&T and/or Verizon.
Yeah.
Do we get a fib lining up here? Not at all. This one's tough. You know how you would do something like this? You got to measure out the base here. So I'm going to zoom in and I'm going to completely ignore this exhaustion blow off low here. And I'm going to measure the base from these lows. So 250 lower bounds, say, 1350, the upper bound, so that's $11. Add that on top to the breakout level of 1350, that gives you about 2450, right? So price target on something like this. You want to buy it as close to this 1350 level as possible, though. We're already trading at 1750. So this one has very much already left the station. If we were to zoom in and do something more tactical, I could draw a little short-term continuation pattern here. And these are always worth buying, right? I like this just as much as the last setup that I just described, because you already got a monster base breakout. You got a little shakeout here. The trend is certainly higher. You could buy the short-term continuation pattern breakout, but even that would have happened at 1580, the latest. So still, you want to get this thing close to the 1513 level. Trading closer to 18 today. Don't love that.
Let's look at PSTG, Pure Storage.
Yeah.
This thing has gone parabolic. What's the market cap? Let me look real fast. Maybe.
I always think this is one of those storage companies.
Come on.
Right? Like CubeSmart, but I think it's actually software.
It's hardware.
I'm saying it's not a storage REIT. Like it sounds.
Oh no. It's like digital storage. It's not like.
No, but do they have data centers then? Is it a REIT?
It's not what's the name of the
No.
What's the name of this, like the storage company? What's it called?
Innovative disruptive data storage. Is it like a Dropbox?
Let me look here. Enterprise data storage platform. So yeah, it's a cloud company. That's all I need to know.
And why they just had earnings.
They did have earnings yesterday, right? Yesterday.
Market likes it. Hey, 21%.
Market loves it. They beat and they gave good guidance.
Yeah, look, if you got in yesterday, great entry. Today, not so much, right? Now we're right in the middle of this range. I just fibbed this one out. Here's how we would draw something like this. You got the nice base here. God, I hate these arcs. So you got this nice base here. Let's remove stuff that we don't want to look at. Once the base is completed, I don't want to see the retracements, right? I want to see the Fibonacci extension. So let's take those off our chart. Got the 200-day actually like curling lower here. Don't love to see that. This recent move from today probably fixes it in the coming weeks. But you have these highs from 2018, 2021 here. But again, I would buy this more on backing and filling back towards this 29.30 level, because we're trading at 35 today. First target of 42. It's already getting kind of extended. It's 21% move today too.
And then we'll do one more here. We'll take a look at MicroStrategy for Carrie Sheffer.
Woo! What's up, Carrie? I have a text from Spencer Israel.
You asked me to text you. That was a half hour ago.
I'm seeing it now. All right. Here we go. Let's fib this bad boy out. We have anything that doesn't really do much for us. Maybe a price target, but not even that really. What are we looking for in reversal patterns today? I want to see trend lines break. I want to see 200-day moving averages flatten and start curling higher. I want to see overbought momentum readings. And I want to see relative strength. So here's MicroStrategy on a relative basis. Notice how when I chart MicroStrategy relative to the S&P, the base looks just as good, maybe even better, right? Love to see that. This is great. Typically, when you see the relative trend lead the absolute trend, that is as good of confirmation or supporting evidence as you can get, right? So I love to see this structure here in MicroStrategy relative to the S&P. If I was getting long this name, which I would be getting long on strength on the base breakout, which I'm about to show you, I want to see this relative trend complete and be up here, right? I want to see the relative trend break out at the same time as the absolute trend. Now, if and when that happens, here would be the levels. Let's draw it real clean here at these August highs. I'm just going to leave it on closing prices right now. Especially when you have like higher beta names, more speculative stocks that tend to be more volatile. Just focus on the closing prices. So that's why I got the line chart up here and not the candlesticks. Let's call those August highs 355. Trading at 303 today. I know that sounds like it's far off, but this happens in a day or two for a stock like MicroStrategy. And then where would we want to take profits on something like this? Easy. You have a key pivot high here from the first quarter of 2022. Oops, sorry about that. 522, right? So 350, 355, long target, 525. I like MicroStrategy. These stocks keep working. And the way I'm looking at these crypto stocks right now is that crypto is simply another subgroup or an industry group of the technology sector. What have we seen over the past month? We've seen one technology group after another technology group, just trending really well, ripping to the upside, whether it's semiconductors, less so for internet, software, cloud. I think this is just a very natural catch-up trade, right? Crypto stocks should catch higher to semiconductors and the rest of the tech complex.
All right, I think that's a good place for us to end it here. This has been CRL Chart Request Live. The show airs twice a week, every Tuesdays and Thursdays at 1 o'clock Eastern Time. Tuesdays, I'm joined by JC Peretz. Thursdays, I'm joined by this guy with now, Steve Strazza. If you like what we do, if we answered your questions, or even if we didn't answer questions, do us a solid. Just hit that like button on YouTube, the thumbs up. We appreciate that. It does help us out in the eyes of the YouTube algorithm. You can always email us if you know you have a question and you're going to forget, to ask it on the next time, or you want us to talk about it next time. Email us. Questions, email us at the bottom of the screen there. Questions at stockmarketmedia.com. And that's a wrap. Strazza, I'll catch you later. Everyone else, see you later as well.
Thanks for joining, everybody.